consumer comeback that he sees is our friend Connor Flynn, CEO of Kimco Realty, one of the largest owner of outdoor shopping centers in the U.S. Connor, it's great to see you again. We thank you for coming back.
Nice to see you.
Why don't you sum up the quarter you just had? And one of the things that really stood out to me was that your ability to sign new leases in the fourth quarter of last year was even greater than it was in the fourth quarter a year prior, right?
That's exactly right. We're really pleased with the quarter. Incrementally, our collections are now up to 92%. 97% of our tenants are open and operating. We predominantly have a grocery-anchored shopping center portfolio, and obviously the grocers have been really the winners in this pandemic, as they were deemed essential and provide goods and services. But to your point, the biggest takeaway is the demand that snapped back. And it's really impressive to see that retailers are out there today looking for new space to take advantage of the pent-up demand that they see coming. Really, I think there's going to be a lot of revenge spending going on, and they want to be, in a position to take market share when the reopening occurs.
So you said that I infer from what you said that you're collecting 92% of the rent that you should be collecting. That was that number you cited? What is the vacancy rate that you're seeing across your portfolio?
We're just above 93% occupied right now, and we came into this pandemic at all-time highs at just over 96%. So we are seeing that demand really be strong to recover that lost occupancy. It's across multiple sectors too. I think one of the interesting things is the essential retailers never took their foot off the gas, but what we've found is now the non-essential retailers are coming back and looking for space, meaning like the restaurants and the discount fitness operators. And so it's a pretty wide spread of demand across our portfolio that we're experiencing.
So, Connor, how should we think about the reopening? I mean, should we think about when the economy is fully reopened and people are back to doing what they normally do, that you're going to gain those few percentage points in occupancy and non-paid rents? Or because the fact of the matter is you're collecting rents as it is. And so what is your leverage to that reopening?
That's exactly right. We see a lot of upside in the future due to that pent-up demand and that demand for our vacancy space. So we see just the blocking and tackling of leasing really driving our earnings growth in the future. And now that we're starting to see that demand snap back, the retailers are starting to look at their real estate a little differently. And the store has become what they're using the phrase fulfillment epicenters, which I think is really important as the dynamic is changing where the store is actually solving for that last mile fulfillment with the rise of buy online, pick up in store and curbside pickup.
We know the stories, as you mentioned, the grocery stores, which seem to be doing very well, the Home Depots, which seem to be doing great. Walmart seems never to do anything but pretty well. How much of your rent or your revenue is tied to the overall revenue of those retailers? In other words, you might collect a percent of what their total revenues are, and are those revenues holding up as well as the other parts of your business seem to?
So the lion's share of the grocery-anchored shopping center leases are actually fixed leases, so that we don't actually get a percentage rent clause, is what you're referring to, where you get an upside potential if they knock it out of the park. That's why our defensive-natured portfolio has really shined through this pandemic, and that the rents that we've been collecting have not ebbed and flowed with the revenues of the retailers. We're steady Eddie. We're sort of down the fairway, grocery-anchored, delivering everyday goods and services, which we continue to think is what's going to shine going forward.
Shepard Smith here. Thanks for watching CNBC on YouTube.